Good morning. This is Jeff Scott, and welcome to this week's review. It is about 10 a.m. on December 28th, and glad to have you. This will be about an hour as we take a look at the market from both a top-down and a bottoms-up process. If this is your first time here, welcome. And I would refer you to the presentation perhaps that I did live 10 days ago or so that I think was intended to really educate folks about the different indicators I use and some of the philosophy of my trading. I titled this week's review, Market Grinds Upward Despite Biotech Wreck. If you participate at all in the HGSI board, then you probably saw a couple of my posts. It's an area where that's kind of where I built my businesses and my fortune in various endeavors. And unlike one of my good friends who's also post on the board, I have the advantage that I'm currently, I guess I could say, unemployed. I'm retired, so I don't have to worry about ruffling too many feathers, although I'm respectful, and I don't think I said anything that was inappropriate. Basically, let's talk about the market and where I think it's going. Disclaimer, this is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. I'm a doctor, not a broker. I am truly independent. I have paid for all the software tools that I use. I am not doing this on behalf of anyone else. I'm not being paid to say anything. Trading involves risk. You and you alone are solely responsible for any investment decisions that you make. My philosophy is pretty simple. I don't claim to have invented much, although I did have a role in inventing something that we call the bongos, which I may or may not mention as we go today. And hold on one second, trying to hide that bar. I don't think it likes my multi-monitor configuration. But anyways, so the things that I do and the things that I apply in my trading, frankly, I learned from other people. So to me, this is about becoming your own guru and finding those folks that have influences or who you would like to influence your style to make you an effective and better trader. Oops, sorry about that. And so there are a number of folks who I've learned from that I find to be very positive influences on my trading. And I thought I would mention them as usual. To me, it started with canceling with William O'Neill. I think canceling has evolved, whether it's evolved through the work of Ian Woodward and Ron Brown, the true geniuses behind HGSI, the trading philosophy, or through many of the folks that used to work for O'Neill, such as Morales and Katcher. Bible gap ups and pocket pivots, something that I use routinely, came from these two folks in the yellow book, again in the red book, and you'll hear me refer to them constantly. Brilliant traders, good friends, and people that I highly recommend. This is their new book, which I think is coming out in March. Alexander Elder and Kerry Lavorne, his partner. These are Alex's books. I use a number of his indicators. His indicators and books can be found at elder.com, elder.com. I've been a follower of John Person for years. Recently been able to call him my friend now as well, as he's sort of my neighbor down here in beautiful Palm Beach, Florida, where, by the way, I'm looking outside at the beach right now where it's sunny and will be 80 degrees today, so that's where I'm going next. John's written a number of books. Two of them are highlighted here, High Close and Low Close Dojis, Pivot, Trading Points and Moving Averages on the PPS indicator within Thinkorswim, which is one of the most popular free indicators, all came from John. Anna Cooling and how she looks at volume and price analysis, Van Tharp from the perspective of position sizing and money management. Tom Dorsey, you might wonder why I look at point and figure charts. It's interesting. I don't think I've ever, I can't say that. I don't think I use charts the way that I use my charts, candlestick charts, from looking at each individual stock and buy and sell points. although maybe I should be using point and figure. But I love how point and figure and Tom Dorsey in particular look at relative strength comparisons within various markets, whether it's cash markets, futures markets, Forex, ETFs, whatever, to find out what's working. Then within the stock market, looking at the major indexes, looking at the market capitalization, looking at top-down and industry and sectors, and then what's leading within the individual industry and sector groups really fits my style and has been a nice adjunct to what I do. And here's my partner in crime and buddy, George Lee. More about George later. George is just a great guy and great, great, great individual trader. What I need on my desert isle, I purposely kill my desktop because I don't want to talk about all the programs that I bought that I never should have bought. I need a trading platform. Pick your poison. I like TradeStation and Thinkorswim. There's pros and cons to both. There's flexibility, customization, and external programmers galore for TradeStation. TOS is probably a better package out of the box and more support. But it doesn't have the same number of outside programmers. Genesis is a great real-time platform. It's independent of a broker, although you can get free data and stuff from various brokers. And some of the things I do with John Person, some of the other things that I've had programmed, I do in Genesis. I don't show Genesis on my webinars only because hardly anybody I know uses them, as a lot of professionals use them. I'll tell you the difference between Genesis, TradeStation, Thinkorswim, and most other programs. If I wanted to code for high jump in TradeStation, it's above my pay grade. I'd have to pay somebody to do it for me. I don't know how I would get it done at Thinkorswim. All I had to do was call customer support at Genesis and send them what I wanted, and for free the next day I got it back coded for me. Just great customer service. I'm a big fan of HGSI. Those that watched Ron Brown this week saw that the real-time version is up and running, or the delayed real-time. It's 15-minute delay. But in market, you can get 15-minute delayed quotes. You can do analysis with it and charting with them, and hopefully everybody will get that upgrade sometime today or beginning of the week. Edge Rater, ETF Bandit, especially Edge Rater, you'll see some of the things that I do over the next 10 minutes or so. I'm a big fan of seasonality, some comments about that today. And much of what I do could be done in websites. I just find HGSI much simpler and frankly cheaper than some of those sites. I always look at this. I keep waiting for us to be here again where the green circle is, but that's going to require a big market sell-off, and then everybody, including your grandmother, would recognize that we're at a market bottom. We're not there. We've been living sort of at the top of this, and every time it looks like we're going to roll over, we get another leg up. Well, we clearly had a nice leg up over the last several weeks with the Santa Claus rally. I'm getting nervous. Not nervous. Nervous is a bad word. I think people didn't sell their gainers this year. And I think that sometime after the beginning of the year, perhaps maybe we'll see some type of a shallow or maybe not so shallow pullback as people start to rebalance their portfolio. But I expect this week to be up and to be a slow grind up as it's been. Market thoughts. Market does continue to move up, but this week it was much slower than the prior week. Growth, which was incredible favor last week or the previous week, was not in favor this week. Was this Biotech Wreck a 2-day phenomenon or more? More to talk about in a second. Going forward this week, another week of low volume. It's tough to short slow markets. Low volume can amplify impact of news, and most tax loss selling is over. All these things should get the market to continue to creep higher. Certain themes came out of my bottoms-up review. Interest rate sensitive stocks still look strong. REITs, especially some of the retail and medical office REITs, and some of the multifamily housing, and the REITs that deal with high-end hotels. Utilities popped up everywhere. Now, I don't know if that's a interest rate story or if it's the fact that they rely upon coal, gas, and oil to generate power, and all those things are extremely cheap right now. Broken record would say that airlines and semiconductors are still leading, but they are. Refiners were the problem, and then the ones that own the gas store stations or the retail outlets. That's the only strength that I saw in oil as I looked at it on my bottoms up review. And then banks, are they getting ready to run to higher rates? Look at Bank of America. It's sort of at a nice place, as high as it's been in quite some time. Wells Fargo also looks good. Citi looks like it's had a lot of reverberations, but it really hasn't changed in 18 months. A few comments about biotech. I have been a biotech bull. Here are some bullish thoughts that I have. The movement down was exaggerated by a low volume holiday week. I called this out on my call last week. I talked about biotech, I talked about pricing, and I talked about the fact that news drives these stocks. What about Gilead? Gilead got destroyed, big word, from 108 down to about 83, I think, intraday, on the fact that Express Scripts has taken it off its formulary and replaced it with the AbbVie drug. I don't think this story is over. Let's say the two drugs are equal. I don't think they are, but let's just say that they're equal. And you're the patient. And on the Gilead drug, it has less side effects. You do not need to take ribavirin, which has the majority of the side effects. It's effective in almost every patient, and it's 1 pill a day for 8 or 12 weeks. The AbbVie product requires 4 pills. It has twice-a-day dosing. It may include ribavirin that has toxicity. As a physician, as a person who someday could be taking drugs for some reason, thank God I've been healthy to date, I want once a day with low side effects. I think that the Express Scripts move, how scripted does this feel to you? The FDA announces on Friday that the drug is approved. On Monday morning, the New York Times has a lead story about how Express Scripts has decided to not pay for Gilead's product and force people to use AbbVie. Too scripted for my taste. There was a nice recovery in both Gilead and the biotechs on Thursday and Friday. Lots of biotech leaders remain strong. They are economically insensitive. They don't sell off because the economy slows. Science is moving at a rapid pace as we develop drugs for MS, more drugs for MS, drugs for Alzheimer's. There is what we call unmet need and what should be fairly significant pricing ability. Therefore, these drugs will go up. Aging population, more patients. ACA, the nice name for Obamacare, more access. And most importantly, and while I remain bullish on biotech, is there's no current vehicle for CMS, the Center for Medicaid Services, Medicare Medicaid Services, to negotiate drug pricing. And since the majority of costs on most of these products are borne by the government through Medicare or Medicaid, until Congress changes the laws that they created in 2003 that forbids the U.S. government to negotiate drug pricing with the pharmaceutical industry and biotech, except for Department of Defense, I don't see substantial pressure on this industry. Now, that pressure is going to come in every time somebody rattles the sabers, just like Express Scripts, the New York Times, and AbbVie News on Monday. But for this to really change the market, there's going to have to be a sense that Congress is actually discussing it with a chance that it will get approved. It doesn't have to wait for approval. Once people think it's likely, then we'll see the bear case. The bear case for biotech, healthcare costs are, I could have put insane. They're an issue. Imagine Alexion charges close to $500,000 per patient per year. Great drug, life-sustaining and saving drug. Can we afford that? The fact that ACA forces everybody to have insurance, more people will seek care, therefore more costs. Commercial payers are not waiting for the government to sort this out, and they're already intervening. They're using PBMs pharmacy benefit managers like Express Scripts, Catamaran are two of the bigger ones. Medco was, but it got bought by Express. CVS has a big one as well. They're looking at capitation, meaning they pay me a global fee to care for patients, and I don't get to bill more by selling more. The current reimbursement methodology does not penalize me for utilizing more. In fact, in some areas, I would make more money. And commercial payers are putting higher patient responsibility. Go back to the Gilead and AbbVie story. Let's say you've got a $5,000 out of pocket. Once you've reached your $5,000 out of pocket for the year, your out of pocket is the same on both drugs. Of course, you want the one that's once a day, not twice a day. But if I told you that you have to pay 20% of the cost for your entire course of therapy, you might be willing to take the more inconvenient therapy, and therefore higher patient responsibility is part of the bear case on biotech. And the presumed impairment on pricing and price increases. So when we think that something's going to happen, when we think Congress is starting to act, there'll be more bad news in the lay press. This will lead to reduced earnings expectations and analyst downgrades, and that's when I don't want to be in biotech anymore. Now, what about seasonality? Don't know how well this is projecting, so let me just look at it within the next two I'm going to look at within Magenta Trader. So Magenta Trader is my preferred seasonality program right now. It's been my preferred for quite some time. And so I'm going to look at two different entities. I'm going to look at IBB and I'm going to look at Netflix. So what I'm looking at here is this is the last 6 months of candlesticks. And you could see that IBB has been in an uptrend, no shocker, from about 245 up until the close of 305. So that's been a nice move over 6 months. I guess that's that's about 25% for the year. Good move. Okay. In yellow, we have the projected seasonality based upon 10 years of past data. On green, the projected seasonality based upon 5 years of past data. Now, is it perfect? No, but frankly, it sort of has followed seasonality. If I look at the correlation and the coefficient, let's see if I got it up here. 0.67 coefficient. So there's a pretty good following of seasonality. Now, if you look at IBB, and let's make this a little bit simpler. Let's just look at going forward. We're in a channel on price, and even with the big pullback, we got back in the channel on Thursday and Friday. So I look at this linear regression, and we are in an uptrend. The green area here is a scanner that identifies seasonally strong periods of time. The red is a seasonally weak period of time. In best choice, they also point out that where I'm at here, which did not color red because it didn't meet the criteria set in magenta, but there's weakness in February as well. But do I want to be shorting biotech when I'm in the middle of a period of time with 6 years on the IBB, from December 19th to January 29th, 6 out of 6 years, the IBB has been up with an average return of 8%. If I get to the April 2nd time frame, it's not as clean. It's only been up 4 out of 6 years for an average return of 5.2%. There's no, and even the negative returns was on the down years was only 1.6%. So the argument I would make on seasonality is not yet. Is there weakness coming? Absolutely. February, March would make me, I might be taking some of my positions off or protecting them. Certainly they run up typically until the cancer meetings, which I also talked about a week ago, which occur in the beginning of June, and then they seem to sell off. I take that into account. But I'm going to be watching the news because if there's any sense that this market is, or the government is going to force price controls on biotech, then you do not want to be in this sector, because there will be fairly massive pricing, reconstruction, resetting. And then once the bar is reset, I jump right back in because there's still a lot of growth here. Netflix, I think I called the slide, "Are you feeling lucky?" So Netflix is almost perfect. It's not perfect. So here we have the pricing. So one of the concerns about Netflix right now is it's in a downtrend, and its coefficient is 0.82. It hasn't really matched, because these are the projected 5 and 10 year, based on 5 and 10 year data. Uptrend, pull back into earnings and take off. We've been pulling back for quite some time. However, not that much different than it looked a year ago. And why am I excited? Because look at the move that we see in Netflix at earnings time in the first quarter. Look at the fact that starting on January 20th until March 2nd, 10 years of data, 9 out of 10 years positive, average return 26.6%. We saw over 20% return in one day after earnings this past year. From March 16th to April 24th, 7 out of 10 positive, 15%. May 11th to June 19th, 7 out of 10. So I'm not telling you to buy Netflix. I'm telling you that it's something that you should be considering if it seems to be stabilizing prior to its earnings call. Now, it only works until it doesn't work anymore. If we look at the data side, let's see which year it didn't work. It's not supposed to be the whole slide. Hold on a second. I may have just messed myself up here. Just type it in here. Okay. For whatever reason, the data, okay. Here we go. Here is in white line 2013, a nice turn up. Here's 2012, big turn up. Here's 2011, didn't hurt you, kind of went up but mild. 2010 turned up, 2009 turned up, 2008 turned up. Remember the white line, 2007, it actually, if you look at where the green box started, it went up. 2006, it did not work. 2005, minimal benefit. 2004, flat line. Over 5 years, this is last year. This is 2012, 2011, sort of flat, but not pain. 2010, it worked. 2009, it worked. We're looking at the white line. So use at your own risk, but the Netflix trade has been a very popular trade at this part of the year. Just as always, I wanted to bring up my upcoming meetings with George. So the good news and the bad news. The good news is I guarantee that barring any major disaster, like, I'm not even going to say, we're out of hurricane season. You can imagine what major disasters are. This meeting is booked. It will occur. There's no chance of me canceling. I've got about 15 or 16 folks who have registered, of which I think 14 have paid. I'm almost at break even on costs. So, and I don't do these to make a lot of money. And that's the good news. The bad news is being almost at break even in cost means it's not a sustainable business model. So I'm going to give it another couple of weeks, probably 2 weeks, because there's another 10 or 15 people that have said they want to come, but have not followed up on those comments. And what the only downside is, I will downsize the size of the room to save money to get it back within budget. But that means I can probably only, if that happens, I'm going to be limited to how many more people I can take. So if you are on the fence but want to come, please email me so I don't make that decision, and I give it a couple more weeks to see if I can get 4 or 5 more people to commit, in which case I'll keep the big room and keep the registration open until the time of the meeting. It's going to be a great meeting, February 7th through 9th, $800. Kind of why it's I'm close on the is that I don't just put you in a room and forget about you. I feed you breakfast and lunch for 3 days, cocktail reception Saturday night, dinner at my condo Sunday eve. And as always, I give everybody a copy, a screen capture video of every presentation. I provide all the PowerPoints in Adobe format. Any customized views that I use, I give out to the attendees. I am going to do a special webinar with George on January 6th at 8 p.m. Hopefully I'll talk to George Roberts, who's always graciously, I guess, allows me to use his GoToMeeting so I can send out invites. Week ahead, even though it's the first Friday of the month, we don't have the typical employment numbers, so that's a week out. Those will be potentially market movers. We're in a funny place with data now. Good numbers might make people think interest rates are coming sooner, which might be bad. I only see one earnings report all week, and that's HGR. So it only matters if you have HGR. But you should always know when your earnings are. And there are some claims coming out on the 31st, initial claims and continuing claims. So I guess we do have employment numbers, but I don't think those are the big ones that we, those probably are actually looking at those numbers. Those might be the big numbers that usually come out on Friday. So we'll have to look at those. Big expectations, 290,000. We've moved off of worrying about 200,000. All right, so let's take a look at some charts and get an idea of what's going on in this market. I know I spent an inordinate amount of time on the seasonality, but I'm a huge fan of seasonality, and I always say I'm going to talk about it, and I never do, so I just wanted to do it some justice. So, make sure I got all my personal stuff closed. Okay. Very quickly, the elder indicators really show you that the market turned around this week, which in the last 2 weeks. Here's the NASDAQ. Again, we're looking at colors, and we're looking at MACD divergences. Pull down here, hit a big reversal, 1, 2, 3, 4, 5, 7 days ago, 7 trading days ago. And you could see a Morningstar reversal, big move up. And now that little red dot at MACD divergence is making its way in on both the weekly and the daily. The good news is MACD divergence tells me to be nervous about a correction, that we've overstretched, that there's less perhaps market pressure to keep this rally up. But when we've seen them in the past, it runs many weeks sometimes before they actually pull back. That's this red dot here. These are person sell signals like the PPS and TOS. Here's a person buy signal. Why is there MACD divergence? Well, we pretty much hit, let me get a horizontal, we sort of hit a new high on Friday. I'm not a good drawer, but you're set a new high or at new high. Yet you look at our MACD, by the way, I think most people know I hate drawing trend lines. If you look at the MACD, clearly it looks different. So you have a higher high or near a higher high or close. I think it is a higher high because I think I do this number way higher high, not a higher high on the MACD histogram or on the line, clear-cut MACD divergence. So the good news is we're green all around. You shouldn't be shorting the NASDAQ when it's green or any index when it's green. Green allows you the opportunity to buy or hold. You shouldn't be shorting. Red, you can short or hold, you shouldn't be buying. So we've got NASDAQ is green, the Dow. MACD divergence showing up here on the Dow as well, these little moves on Thursday and Friday. MACD on the weekly, everything is green, big reversal here as well. And again, you could see the MACD histogram and the line not making a higher high, although we made a higher high in price. Russell futures, broken record. MACD divergence, this is a triple top as we'll see later, but certainly a higher high here without a higher high on the MACD. Everything is green. S&P 500s, God, I sound like a broken record. MACD divergences galore on the index, but green, so buying window is open. NASDAQ 100, no MACD divergence, but green MACD divergence on the weekly. And the S&P 100, MACD divergences, but green. S&P cash market, MACD divergences in green. So what does this all mean to me? Market's getting extended, it's stretched. The MACD divergence says that we're running out of steam, but we're still running, still going up. So I look at a number of different things during the week or during the day. I look at my indicators that we've talked about, some ARPS indicators and some of the person indicators as I try and find things. This is a free indicator. If you have TradeStation, go into the TradeStation forum, look up the Guru, and why is that not working today? And the Guru, I guess I'm still building it, tells me when the earnings are due, before or after the open, and how many days. And that's a great indicator to have. And I'm monitoring for a number of different things, including Bible gap ups, pocket pivots, mobile breakouts, red candle highs, green candle lows, today's volume versus average volume. And I can scan during the day for any of these, looking for pocket pivots, etc. But what I also like to look at is the state of the 3X bulls and 3X bears. And I had mobile breakdowns in gold bears on both the J dust and the dust. So that's weakness in the bears on gold. So that might tell me that something's going on positive in gold to the strong side. And I had a pocket pivot in the mid caps. A lot of volume for a holiday shortened week or day, or holiday shortened or reduced trading. All right, enough of my TradeStation. Now what I'd like to do is go into a quick review of what happened last week using EdgeRater and HGSI. So the first thing is, let's look at the GPA. What was my grade last week? This isn't an accurate representation of my portfolio because my portfolio changes, but it's a list of stocks that I put in various categories at the end of market the prior Friday, and it helps me understand what's working, what's not working in the market. And it is a static look at my holdings, and so that I might have done better or worse because I did trades during the week that wouldn't be reflected here. So what do I do this for? I do this because I want to look at a couple of things. I want to see where the S&P 500 was. So the S&P 500 was up 0.88%. As I look at the market, I see more black than red, so that's positive on the market. High relative strength in EPS was good. And then what's kind of interesting is that this is a bearish group, and going long, 6 out of 7 were up 3.46%. This is a bearish group. This is a bearish group. This is a bearish group. So some of my bearish groups outperformed. You see that with portfolio resetting, junk off the bottom, etc. Here's the S&P up here, and the HGS 100 was 0.27 versus 0.88 for the S&P 500. IBD 50 was down 0.4. The stocks I thought looked attractive to buy, although not necessarily bought them, were down 0.55. If left static because of the biotechs, and this doesn't take into account if I have puts for protection, my account would have been down 1.1%. Remember, it was up big the prior week, so some of that is probably, I hate to use the word expected. The top GIF All-Stars were down 1.6, high beta stocks were down 2.6, even best of Woodward and Brown were down 3.8. So the stocks that really did well the prior week were laggards this week. The Hindenburg, not an issue anymore because our new lows are almost non-existent. Bucketology, we're getting there, but we're not at a point that says we're too far to the upside. 87% of stocks in the S&P 1500 are above the midline. In the S&P 1500, that's a big number, yet only 6 or 7% are above the upper band, so more room to grow there. Here's where we were a week ago, and you could see how we moved that up here higher. We reduced some of the heat on some of the ones that had gone too high. Perhaps these were airlines and stocks benefiting for the energy wreck. And the number of underperforming stocks reduced. Markets, this is how you end a pullback, is 2 rows of kahunas occurring on the 17th or 18th. We're all in green now, which can make you feel good to be long until that changes. All right, let's take a look at the market with HGSI. So now I'm going to flip to my top-down approach. I actually look at a lot of charts during the weekend so I get an understanding of what the market is doing. This weekend was probably 700 charts. And that's not tops down, that's more bottoms up. But I do it really to supplement on the weekend. And during the week, I shorten my time commitment by relying purely on the top-down approach with a couple of kickers that I'll show you. These were the stocks that I liked this week. If I was to be fishing to go long, and you could see the industries, lots of airline stocks. The infrastructure are mostly stocks to deal with malware and viruses. Big issue right now. I mentioned the refiners, semiconductors, and some of the biotech and specialty pharma, although more specialty pharma and mostly special cases. And we'll come back to these perhaps at the end. Let's take a look at the market. Woodward and Brown User Groups, Major Market Plus, and go your top-down view. Top-down is all price and volume, mostly 1 day, some 5 day, and a little bit 3 weeks. And it shows you, gives you a sense of what's working in the market. So down at the bottom are commodities and volatility, silver, gold, volatilities, bonds, gasoline, oil. I don't know what the heck semiconductors are doing down there on the bottom because they must not have been all going up. Commodities down, utilities leading, small cap, mid cap, NASDAQ, NYSE, Russell 2000. So large stocks perhaps slow down a little bit. Here's S&P 500 and the Dow. Small stocks and mid caps ahead. All right, it's great for growth stocks. Why were our stocks doing poorly? 5 day return, utilities, transport, small caps leading, volatility, gas, commodities, gold, treasuries trailing. 1 day return, gold and silver popped up off the bottom, and we'll take a look at that. So let's do my usual. Let's look at the major ones here just to get a sense of where we are and where we might be going in the market. I'll spend more time on the S&P 500 typically than the others, and then quickly run down into industries and stocks. I'm not going to spend much time going over my view. Again, I refer you back to the posted in multiple places live meetings, which explains every indicator and how I build my chart. And the feedback I had was that was very positive because it gives you an understanding of the method to my madness. Before I switch to a more sensible view, I'd like to point out that last week there were 4 trading days, so there were no kahunas or eurekas. The prior week we had multiple kahunas, 2 days in a row on all the major indexes, as I showed you on across the board kahunas back there. and no eureka. So now I'm going to flip out of this and go into a clean view, which is going to be my purely moving average views. And, we're in this kind of a wedge formation. Pulled up here, down to here. And, I drew this last week looking at the highs prior to the most recent lows and drew my trend line. So the bearish story here is that we are kind of at a trend line and one might expect to see resistance soon. The bull case is, the first trend line actually took us a little bit higher. So I guess my target here on the S&P is, maybe we get up to 2100. Excuse me. Go back down here. We closed at 2088. So, I don't see 500-point move in our future in a short period of time. We're kind of up at resistance on the S&P, and we did see the S&P slow down. That said, we can break this line and run up a little bit, sort of in a blow-off top before this is over. In a weekly, similar story. Here's why you should be bullish. We've been in a nice uptrend since 2011. Depending on where you draw your trend lines, we are at a point here where we are at the top where we've seen reverses. Now, a lot of these reverses are nominal reverses, and we stay above that green, which is the 17, in this case weekly, moving average. And we've only, on the weekly, we haven't broken below the 200 weekly, thank goodness, because it's down here at 1,584 since 2011. So that's would be a 200 weekly or 1,000 day. Tighten this up a little bit, and you can see that we've had a couple of visits. Let me clean up all my junk. Back here in October, we visited and bounced off the 200, and clearly we are in another nice move up. But, at what point do you get to where you have to wonder, when do you start to slow down? So here, are we losing momentum, and are we kind of close to that next area? Use your own call. To me, we're closer to a top than we are to a bottom, but I do expect another slow grind up this week. What else do we have? Let's take a look at the Dow. As I mentioned, the weaker have been the larger. Dow broke out to new highs. That's pretty exciting. Broke out of my potential resistance. And so the Dow, certainly the bull case is here. You're seeing topping tails. All right. Now, on holiday, shortened days, low volume days, maybe those topping tails don't mean anything, but it looks like a tired market. The NASDAQ, at what we put in prior at potential resistance, breaking out towards new highs or at 14-year highs, but at a natural place of resistance. Take a look at the Russell. Talk about natural place of resistance. We're at a triple top. Maybe we broke out a little bit above it. So if you want to be a bull, if we can break out above this line, that should drive us to the January effect and give us another little run in the small caps. And off of this bottom, my goodness, these small caps are now up off the most recent recovery. They're up 16.8% in 50 days. So small caps look awesome, but at resistance. Feel like a broken record. Everything looks like it's at resistance. Mid caps, not at resistance. In fact, take a look at prior highs on the mid caps, and they broke out nicely out of their triple top-ish area. So mid caps, small caps leading the market, and I think they're leading the charts. Let's take a look at the other things that we might see here. Let's take a look at the dollar. Out to new highs. Well, the interesting thing is the dollar's breaking out higher and the stock market's going with it. For a while, there was an inverse correlation. I guess at some point, if you sell product ex-US, this is going to be a problem. If this is great for banks, I suspect. Probably is also an issue related to the fact the strongest economy in the world is in the US, and we'll be the first ones to raise rates. Now, that won't be good for gold and silver, will it? And you could see gold struggling. Now, it had a nice up move on Friday, big move on Friday, frankly. It was up on Friday 2%, or $2 at 1.83%, almost 2%. Boy, does it have it has to get through the resistance here and here before I'm a believer, and it's just failed there for quite some time. So the dollar kind of getting back to where I thought we'd have long-term support at 115. We closed at right there at 114.83. So perhaps a break above 115 will get us into a new trading range and maybe change some of my tenor on gold and silver. Silver, all right, I know it's here. Enough said, same story, long ways to go to get to where we had thought might be a low. Volatility should be on its way down based upon how the market did. Pull back down to the 200-day moving average. We're kind of getting at a place where this thing usually hangs out without doing much. Again, when I see the VIX going up, my stocks are going down. So when the VIX is rising, I want to be positioning to the short side. I want to be looking at contra ETFs. When the VIX is falling, I want to be diving into the market hard because that's when I make the most money. When the VIX is going nowhere, which is where it spends a lot of time down here in neutral, then it's more to me of a stock picker's market, as I'm not relying upon the increasing or decreasing volatility as much, but rather the inherent benefits of my stocks. We're getting down here. Bounce up, I'm going to be nervous. Continue to drift down to the 12 range is kind of what I expect to see. So low volumes in the market. I didn't comment much about it, but this was a low volume week. Let's just take a look at the S&P. Let's go down. We actually, in major market ETFs, Ron Brown has set it up so that we actually calculate was in here. All right, maybe not. Hold on. Broad market indexes. These are actually calculated, built up from the stocks, so we get volume. So you could see on the S&P 1500 that with the holiday, our volume just was puny. No surprise there. Probably see more volume this week, but that's still pretty puny volume. Just curious, look at that IBB. Look at the volume that came in on Monday and Tuesday. Tons of volume. So that rise during the week, at the end of the week, that might be concerning if you still have a lot of biotechs. But I am impressed with how end of day that 50-day held, and although we did trade below it or open below it on Thursday, it closed midway up. Another big up day on Friday, so maybe biotech has stopped falling. All right, now I like to move into industry groups. So I go down to 07, and you can see we now have 177 groups. So based upon several weeks, the semiconductors, utilities, you can see what's been working here, trucking, specialty pharma. I really don't care about 3 weeks ago. I care about what's working right now. So let's look at the 2-day force up. So force looks at today's price minus yesterday's price times volume, plots it, and then we look at a 2-day and a 13-day exponential value. And what I'm ranking these things here is pretty much by their 2-day force value. You get 2-day force by what? Price change and by volume. So if you have an inordinate amount of volume, you're going to come to the top. One of the great things with force as a ranking tool is that it's quick. One of the problems with ranking it as force as a 2-day, it might be too quick. Because if I look at the 5-day up, I don't see biotech there. This is more what steadies things. And this has been a volatile market. You can actually see here's 2-day down, and I've got a 5-day down, and there's biotech. So over the last 5 days, the force on biotech has been down. But over the last 2 days, which is what I like to look at, it gives me a sense that things are going the right direction. So right-click on biotech, change to index groups. Let's look at those above the index, and then I'll look at a couple of the major ones that I've mentioned before. All right, so now I'm going to go out of the easy charts and into my crazy charts. But again, I refer you to that webinar in the last 2 weeks where I go over what everything means here. So this is ISIS. Let's give it a little bit more data. Nice uptrend. Had a mobile breakout. Squeeze on Thursday, mobile breakout on Friday. OBV is heading up. Mostly green. The red thing is the daily bongo. You can see no more Hindenburg, so I'm not going to worry about them for a while. Makes a little bit of revenue. It's a biotech stock. Nice up move. Little pullback Monday and Tuesday to the 17. This is strength. Nice leader. Looks nice. Celgene. Talk about leaders. Here's some of the earnings per share growth. Why I think this could hold a 140 price. Why I'm long. Pull back to the 50. It looks just like the IBB jumped up on Friday. Would like to see it take out its prior highs before I jump back in full-heartedly and take off my protection. Regeneron, similar story down to the 50. Here's the index. Here's a couple of the other favorites. Here's Alexion. Broke down below the 50. Great earnings per share growth next quarter. This one just means we don't have the data yet. In fact, what I typically do, and I'm just going to do it once, so I show you what I do, and then I'm going to do it off screen to save time, is and I'm working with George to see if we can get more data into HGSI, but I like this box here. I like to look at earnings per share growth rate year over year going back many years. So here's 2015, say $6, 14% growth. Its multiple is 38. Will this decreasing growth in the current environment support a multiple of 38? I don't think so. Maybe, maybe not. And if this comes down, can we maintain this price? I don't think so either. I see slowing earnings, which bother me on MarketSmith, on Alexion, and I'm not long this one for that reason. That said, you want to see a winner of the biotech world. Let's put this on a weekly. Let's go on a monthly. This is a winner, folks. You know, you can say whatever you want about $500,000 per patient per drug. We have a stock that in 2005 was a $5 stock, and in 2014, going into 2015, it's just about a $200 stock. That's a 40 times. Wow. I just think slowing earnings is not good for the company. BioMarin is one that's working, a winner now. Nice up move, pull back here with everybody else. Nice move up through the 17 and through the 8 on Friday with the kahuna. Amgen, leader, just like the other leaders, pull back and is living on the 50. Merrimack, one of the ones I talked about before, continues a nice steady run up. I don't know if this is, I own a big chunk of this one, 5 figures worth, so I'm a big bull. That also means I'm a big bias, right? Bias. But I love this stock. Mobile breakout from a squeeze on Thursday, hardly sold off at all with the changes related to Express Scripts, Gilead. They make a number of cancer products. I'm going to take profits on January 2nd just because I've got profits, and it's a big position, but I still think this is a nice up movement. It's a story stock. potentially a takeover candidate this year. A lot of neat stocks here. And again, why I get nervous with biotech. In 2013, one of the leaders in biotech, is that not a beautiful chart? Do you not want to be long this stock coming off the 50 here, maybe breaking out here with 3 kahunas? Would you not have loved this stock? This is called Arrowwood Research. Of course you would. And this is why we love them. Nice run up from July of less than $2 up to 16, 18, 20, 22, and 26. Now we're in March of 2014, and whoops. This is why you got to be careful on biotech. I often refer to this picture when I talk about the market. Is this not what Arrowhead did? Every stock does this. Don't marry your stocks. Maybe it's time it's going to run again. Actually, that was August. Oops, I didn't just do that. All right. Don't marry your stocks. Here's Gilead. Look at this huge gap down that stopped at the 200 and held. If you want to buy it, I think you buy it here. But you got to be careful. And you might set your stop down here. Perhaps you set your stop here. You can even set your stop here, although that's probably too loose. But be careful with this one. If there's more saber rattling, this company is going to go down and probably be first to go down in this sector because of the fear that's already baked in. Right click back, next group. One of my other favorite groups, airlines. Automobiles, I'm sorry. Change, that means Tesla must have had a good week. Tesla came out on Christmas Day and said we're going to have a 400-mile range, and we also have a $35,000 coming. So, it's still in the penalty box. It's below the 200-day moving average. I'm not a bull on this one. Got above the 200 and the 50 and retest, and I'll reevaluate. Weekly bongo is still on a sell signal. Unbalanced volume broke above its moving average, which could be bullish. One to watch. I'm not a Teslonian right now. GM up at resistance at the 200. Ford Motor Company similar below the 200 days. So I guess it's because of the volume on these stocks, 5 million on Tesla, 13 on GM, and 32 million on Ford. That's a lot of volume. Maybe we should pay attention, and maybe that's why they're second ranked. Not me yet. Communication, telecommunications equipment. Apple looks like it's probing to make another run. Let's take a look at Apple. So Apple had a couple mobile breakouts without a squeeze. OBV is down. Had a PSCI reversal, broke above the 8 on Friday. Earnings per share growth. You look at the growth, you look at the trailing 12-month PE, not inappropriate. Earnings not until January 26th. Let's take a look at a weekly. Do we see anything? Pullback, held at the green line, the 50-day, 17-day weekly. I think Apple looks interesting, and perhaps Apple is someplace you might want to be bobbing for. Not a BlackBerry fan. Cisco, wow. Not much in the way of earnings per share growth, breaking out to multi-year highs. All right, back. Integrated utilities, we're going to skip them because I'm not a big utility fan except for defensive play, but it tells you the concern in the market. Change index group. I own Hawaii, American, and Delta. I'm pretty fat with profits in all of them. The last one I got in was American. I got into America because it had this rising, I would call that a wedge, triangle, And when it broke above this line, I went long, actually went long a couple days earlier. But I'm long American, and I'm long American because of its PE and its growth rate. 842 in 2015, according to MarketSmith, growing about 47 times. Well, it's got a multiple of, say, it goes to 10. That's an $80 stock without growing the PE. Let's look at what the other PEs are in this group. Here's Delta. Its PE is 15. What if America hits these numbers and gets a PE of 15? That's a double from here. Here's Delta. Obviously, these are going up on oil. All of them have pulled back. PSR reversal, mobile breakout from a squeeze. Delta looks viable. United Continental looks like Delta. Southwest looks like Delta. JetBlue, a little mid-cap. Great story here, coming out of a squeeze. Everything's green, a couple of pocket pivots. Like JetBlue, and I can tell you JetBlue's earnings, not so shabby. They're projecting $1.25 in 2015, which is up 84%. They get a multiple of 26. So if you take that multiple down to 20 times $1.25, you got a $25 stock. Hard not to want to be long. At my live meeting, I talk about my favorite trade. Elder calls it his A trade. This is my favorite trade. My favorite trade is a stock that's in an uptrend that pulls back to the 50 and goes up with momentum. So let's just look at a weekly. This Hawaiian Air. Is this in an uptrend? Yeah, this is in a big uptrend since September 13th, 2013. And I spotted it here coming through the 50. Kahuna, on-bounce volume crossing through, had a mobile breakout and a squeeze the day before. Most of my things up top turned green, and I've been in it since about $15, and you could see a nice move up. This is the trade I look for, pullback, buy it off the 50 with momentum, and I maintain a long position in Hawaii Airlines as well. Now, I will probably pick two, take profits in the others because I don't want to be a hog. Consumer electronics, interesting, they're going up here. GoPro is probably the reason for that. And if we look at GoPro, we can see that it's had a, if I can show you the chart, great couple of days off the bottom here. It's got some potential resistance here at the 50, but it looks like it's making a move. Would you rather own GoPro or would you rather own Ambarella? I'll take Ambarella. Uptrend, no downtrend, already bounced off support, broke out on Friday. Still a discount to its high, great earnings per share growth. And they'll sell to most people where GoPro is an end user of their product. Ambarella looks good to me, has looked good to me for some time. On back. More utilities and telecoms. Let's look at the specialty pharmas here, change index group. So Salix had some bad news. I think they missed earnings, or they missed sales I think they missed earnings. And the stock got hammered. And look at this. It's made its way back to 120. It's going to have resistance here. Mobile breakout there. Earnings definitely changed projections after it stubbed its toes. Let's take a look at SLXP on my MarketSmith on my other monitor, and it shows 383 in 2015. Which is reduced from the prior year. So I'm not a big fan of Salix right here. Vanda, downtrend breaking out here. Figure out what the story is. It's not about earnings. This Kite has been a beautiful stock since its IPO. Nice run up here. Hard to buy these. I've talked about it before. They're all news driven. They're going to get zipped back and forth based upon news. Even though they don't have products on the market, companies like Kite and another one, Aegis, and another one, what's the other one that came out? See if I can remember all these things. Sometimes, let's see. Let me take a look at AG. Here's another one that's had a big move. These are all driven on hope and prayer. They're driven on licensing deals. They're driven on preclinical data. They're driven on early study data. They're not driven on revenue and earnings. So be careful, but they can come out to be pretty big moves. All right. If I look at the groups that are down, oil exploration, department stores, and rails. Let's look at these real quickly because, 2 weeks ago or 1 week ago, just not the past 5 days, so 7 or 8 trading days ago, these stocks were all moving up. And as I mentioned, the only things that look good in this patch to me on my charts were the refiners. So we had a nice run up, went sideways. At some point, oil is going to level off. Are we there yet? I don't think so. I think that these stocks are going to run up even before that happens. And it's hard to get excited by any of these. Here's one that I own. Big move up, sideways as well. So oil exploration needs to see something happen, I suspect, or stabilization in the oil patch. Surprised to see department stores here. I guess people are concerned about Kohl's and Macy's, perhaps. Macy's has been a leader. So let's take a look at these. Kohl's going sideways, sold off a little bit after Thursday and Friday after a nice run-up. What we're hearing down here is that, as of everywhere else, Black Friday was not great, but the rest of the Christmas season was strong. When you see Macy's up here, it's hard not to like the chart. Why is Macy's up here? I guess Macy's is up here because it has 5 million shares traded and it was down. Hard for me to get excited. It's based upon being down 2 cents. What else is on this list? Rail freight. Interesting question. Are these ready to come back up? Now, none of the stocks are here, but let's just take a look at this. And then we're going to go to a couple of bottoms up, and then we're going to say goodbye. So the rails got hammered. They got hammered because of the crude that came out of Bakken and other shale areas that reduced. But interestingly, unlike Biotech, they had a big jump, actually got back above the 50. We should be so lucky to see Biotech do as well. So why have the rails done better despite the fact that nothing's changed fundamentally on oil? Let's look at index group. Let's take a look at a couple of these. Industry group. Oh, this is not going to work for me. All right. I'm going to take my filter off here. This changing resolution of the screen just drives me crazy. No filter, okay. Canadian National, big pullback, back above the 50, looks just like the railway index. Canadian Pacific, not quite, looks similar though. CSX. This one looks like it's buyable. PSAR reversal, back above the 50. So I don't fully understand why these guys are behaving so well without a fundamental change on the oil pricing. Might be worth doing some research. Genesee and Wyoming, not so good. Kansas City Southern, perhaps is setting up some kind of a head and shoulders here. I guess the one I like the most is, let's see what Union Pacific looks like. Probably this one or CSX. Now, perhaps these things are doing well is because they pay a dividend. Other things that got affected in this group, Trinity. I don't think Trinity's ready to be a buy yet, but let's see what it shows. It looks like a lot like the oils. A little bit of run up here, PSA reversal, still deep in the penalty box. Greenbrier also well below the 50 and the 200. Watch this one. And I say to watch this one because look at its earnings per share growth. There's going to be a need to refurbish many rail cars because of the safety issues. It's showing in 2015, 450, 45% growth. It has a multiple 17. That would get you to 68 to 75 without PE expansion. But let this turn into an uptrend or give you a reason, maybe bouncing up perhaps above this 200 before you jump into it. But that looks interesting as well. So that's how I do top-down investing. Now, the other things that I do on a nightly basis. Now, if you think about it, I've been on this call, my wife would tell you, for way too long. And I would agree with her for a change, for a little bit over an hour and 16 minutes. But I spent only 40 minutes or so on my top-down. That's what I do every night. The other thing I do at night is I go into all securities and I look at a couple of quick scans. I look at sprinters, which is in, everybody has that, and I see anything else popped up that I didn't see. Rite Aid, we've talked about that a lot over the past year. These are strong technical stocks. I look at volume buzz. And, you know, there wasn't a lot of volume this week, so Zaza was the big winner. And the reason why I look at volume buzz, almost invariably, when nothing exciting here, but let's look at I'm trying to figure out something where it's actually going to work. Okay. Look at here. I mean, up and where my arrowhead is going, there's absolutely no reason to be invested in AGIO unless you know something. It's sideways. Then notice what we see here. Big volume bars. Coming days before a buyable gap up on massive volume. On balance volume had tipped off. I can't tell you how many of these stocks that become big winners change from being an also ran to a winner by showing momentum. That momentum could have been this mobile breakout from a squeeze. It could have been pocket pivots. It could have been kahunas. But what you have here is massive volume coming in and the stock taking off. It pays to look for volume. So I built into my HGSI, and I'll share with my attendees, a 3x and a 5x volume. Not hard to do. VoxelJet reminds me of the 3D printers. And I think what I'll do is I'll close by going to my buy list and just running through these very quickly. I'm going to say why I liked them one at a time, and then I'm going to end. And there's 47 here, so this is going to be quick. Planar Systems, semiconductor company. Nice uptrend, high base here after a big move up. Mobile breakout from a squeeze on Friday. Kahuna, earnings growth coming into the stock, less than $10 stock. Everything is green. It meets all the criteria I like. This is one that I might be buying on Monday. Qualys. Qualys is in the group of like Palo Alto Network and like VDSI. The three of them all are about the same. Palo Alto has had a great year. Qualys looks like it wants to follow. Hawaiian Holdings, this is my Hawaiian Airlines, great stock, great growth, big profits, time for profit taking for me. Ambarella, I already mentioned it, pull back to support, taken off, rather than play GoPro, which is as someone else called a camera with Velcro. I'll buy the company that sells the insides because other people are going to want the same camera. Tower Semiconductors, not yet. Uptrend, pulling back, had a pocket pivot on Friday. I like to see it take out that 17, maybe flip the PSAR, but that's going to be on my watch list. DTS, I guess they're a patent troll company. Uptrend, you can't see it here well. Big volume came in. The stock had a Bible gap up after a mobile breakout and a squeeze. Ran up, pulled back to the 50 where we had 3 kahunas. Mobile breakouts from a squeeze. Everything has turned green. Breaking out above the 50 on Friday. Like that pattern a lot. ARC, all I liked about this was a similar pattern, uptrend, sideways, breaking out. Don't know enough else to say about it, like those earnings numbers there. Skyworks, take your pick. Triquint, RFMD, Skyworks, IDTI, they all have the exact same chart. They've been the big winners, have driven semiconductors in 2014. Will they continue in 2015? This one's a beautiful lower left, upper right. I like that chart. Enanta, they're the ones that make one of the drugs that AbbVie brought to market. I would have thought they would have been the big winner. I guess people tempered on them because of the issue around pricing. But remember, they're part of the ABBV, whatever AbbVie says. They're part of the AbbVie combination. So they were the winner on the Express Scripts issue. They're looking at $9.85 in 2015, but only $3.68 in 2016. But that's still not even a 15 multiple. I think this is a takeover candidate. Heartland Express, truckers should benefit from the oil. Lower left, upper right. United Continental, another airplane. Southwest, another airplane. SAIA, lower left, upper right. Been basing here. I'd like to see it break out of that PSAR on volume before I got in. Good earnings per share growth, another trucker. ExamWorks, healthcare services companies. I don't think it's a really sexy business, but it's a nice looking chart breaking out to new highs. I might be careful of this based upon its multiple. We talked about Greenbrier. FireEye is a bottom fish. What do I do with FireEye? Right now, nothing. I might be interested when it breaks above the 200. I'm going to be looking for a big high volume day. Did I get that on Friday? I got 5.8 million shares. That's about its 50-day moving average. I'm looking for a reason to buy FireEye. It's been hammered. I love the base, but I'm looking for a reason. Not yet. Illumina, healthcare devices, life science, they provide a lot of things that these biotech companies use in their development process. Mobile breakout from a squeeze on Friday. And it's that pattern that I like so much. It's a stock that's been in an uptrend. It's gone sideways for a while, really for all 2014. Now I look at that daily, and is it getting ready to move off of the 200? Maybe. I'm going to watch that one. Palo Alto, lower left, upper right, big kahuna, great stock. Enough said, this doesn't look very sexy on the earnings, if earnings could ever look sexy. But if you had MarketSmith in front of you, you would see $1.47 in 2016, 75% in 2015. So right sector, looking at perfection on those numbers, I suspect. American Airlines, where I talked about that. Hudson Pacific, this is just one of the REITs. I noticed them because they did a recent deal with a hedge fund where they took over some properties. I'm not a REIT aficionado. I worry about the REITs in general when interest rates go up, but they've been working, and this one is working as well. Delta, another airline. So talk about bottom fishing. At some point, there's three of these. There's Emerge, EMES, Silica, and a third, High Crush. Three fracking companies that provide the sand that have all been hammered because of the concern about the end of fracking. Big dividend yield, but we haven't seen what dividend they pay with their business now. So I wouldn't be buying on that. I just put this on a watch list and I look for reasons. I don't know how they maintain these. I'd be looking at news reports and analyst reports. But here's a stock that's dropped from 140 down to 60. Be curious to see what happens there. Don't know anything about Accelix. I like the fact it's been basing. On Friday, it had a kahuna. Everything's green. Mobile breakout from a squeeze on Thursday. Doesn't make money. Caveats galore. Story stock. Something caused it to drop, but I like the pattern for whatever that means. Alaska Air, another airline. RFMD, like Skyworks. Chipotle broke out of my triangle this week. PSAR reversal, unbalanced volume turning up. High risk, I think. Expensive stock, I bet it goes. And that was what I was waiting for on my buy, was for it to take out the top or the bottom when I would short it. Right now, it looks like it's a good stock. Baidu, pull back. Looked like it was a short. If it would have failed at the 50, it broke above it. Mobile breakout from a squeeze. It's on my long list. LifeLock, hammered, nice gradual uptake here. Mobile breakout from a squeeze on Friday. PSAR flip. Probably, been basing here for 6 weeks. Might be a low risk place to buy it. It's got earnings coming in. Amadeus, infusion pharmacies and other things, home health, breaking out here. Love its earnings per share growth. Used to be a much more expensive stock. Going back here, it looks to me like nice saucer bottom on the monthly, breaking out. So something fundamentally has changed here. Diodes, I don't know why I put it on my list. I have nothing to say. DDR is, I believe, another REIT. Pays 3.3%. Retail properties. And then 3D systems. Is this the time to get back into 3D stocks? I don't know. I know that SSYS, DDD, X1, Voxjet all did this move on Friday. At some point, they're going to be good to buy again. You have a lower low and a higher high. So is this the end of the downtrend? I don't know. Put it on a watch list. Watch it. They've got earnings. They've been beaten down. Certainly believe these are here to stay. Hasn't showed up on my list for a long time. Avigo, just like Skyworks, RFMD. Insys was another one. This failed my pattern. I liked its earnings per share growth for this year, and it broke above my resistance here and went right back into the trading range. So I'm not in this right now. I like its earnings per share growth for 2015, but it's going to have to break above this, test, and go back up. Not yet for me, but on my watch list. JetBlue, we already talked about. Michaels, as a retailer, must have been taken private and then brought back to the market. Nice pattern, but it's an IPO. VDSI is another of the security companies. I bought into it on this pullback to the 50. It looks like it wants to run as well. And then the refiners. Breaking above my descending triangle pattern here. Phillips holding. If it moves up there, that might be interesting. It pays a little dividend of 1.9%. Don't know anything about Navigator Holdings, except I like the earnings per share growth. It's marine transportation, which has been a tough group to be in. Doesn't pay a dividend. Looks like it's bounced off the bottom up to the 50. I like the recovery here. Probably would be more just interested in watching this than jumping in. Tesoro, another petroleum story. Earnings drop off after this year, but pull back to that 50, moving back up, mobile breakout from a squeeze, nice pattern. IDTI, add this to my Skyworks, RFMD, Avigo. Don't know much about this, except I think these are the old biofuel company, BIOF, and it's a smart hedge fund guy that's created a number of assets early on in its things, just something to watch. Marriott's another REIT, lower left, upper right. Can you be any prettier than that? Only pays a 1% dividend. That could be prettier. EPAM, IT company, pull back to the 50, looking for a reason to get in this. It's squeezing. I need to see volume come in here, kahuna something. That's why I have a watch list to look for changes. Haynes brand, tight lower left, upper right, going sideways now. Needs a reason to get in, makes good earnings well above its PE. Looking for volume or momentum coming in or pocket pivot. CyberArk, this is a Gil Morales pick. It's also in the cybersecurity world. I think this is a good place to be in 2015. Whether this is a good stock or not to be determined, one that I'm watching. And Alibaba, I'm buying some here. This is the 50. I'm interested in buying this off the 50. Maybe not until it breaks above the 8. I'm interested, doesn't mean I bought it yet. And then I've got a natural place to put my stop. I could be tight, perhaps underneath this low from Tuesday. I could even bring it down to a few pennies less than 100, which is less than 5 or 6% from here. If you're an Alibaba buyer, maybe this is the time to start thinking about getting in. And on that note, this went much longer than it usually does. Give me feedback if you like me going through stocks or not. And let me just pull this back up. So again, let me review my comments about my meeting. The meeting is occurring, period. No ifs, ands, or buts, no risk of cancellation, barring some horrible thing that I can't control. However, I'm scaling back expectations based upon attendance thus far, which means I will probably only be able to take a couple more folks in the smaller room. The smaller room only to save costs so I don't lose money on the meeting. I'm not going to make the change for another week or two. So if you're on the fence, but you think you want to come, or you've said you want to come but haven't gotten ready to pay me yet, please email me, let me know for sure, and get your check in the mail so I can hold your spot. It's going to be a great meeting. Book your flights. I guarantee it's going to occur 8:30 to 5, the 7th through the 9th. Optional boating day on the 10th. If it looks like it does today, we'll have a great time, and we'll see you soon. Thanks, everybody. Have a great day and enjoy football. I gave your day back. At least gave my